Okay, Jubilant FoodWorks, let's just talk a little bit more about those earnings. The numbers have been below estimates. It's the same store sales which have really disappointed for Jubilant FoodWorks. The stock, of course, languishing by about almost 2%. Ravi Gupta, the CFO at Jubilant FoodWorks, joins us on the show right now. Mr. Gupta, hi, morning. Dismal set of numbers, and more importantly, the biggest decline came in from the same store sales for the first time since the listing, which has led to margin contraction. Is this the bottom for you guys, or do you see further pain coming in?
See, it is very difficult to see whether it is a bottom or not, because we need to first understand what are the factors which are responsible for declining the same-store growth. Now, two main factors which I will say. One is the declining economic growth, which has led to lower discretionary incomes and disposable income in hands of the people. And at the same time, when the demand is low, inflation tends to be very, very high for the consumer. It is entering double digit. Now this further reduces the disposable income. Food service industry thrives on growth of disposable income and discretionary income because that is the space it lives in and breathes. And if these two factors are reducing the disposable income or discretionary income for the consumers, the same store sales get impacted. Having said that, it is not the only factor, but I will attribute about 80 to 90% as the reasons for the decline in the same store growth. Two more factors I would like to highlight. One is increasing competitive activity. Are we worried about it? Definitely not, because in the long run, this competitive activity is very good for the industry. Although in short term, it may give them a little pain. And our last reason, not the very least, is our own aggression, because we are also cannibalizing our stores at this point of time. We have opened 47 restaurants. We have also upped our guidance from 135 to 145 restaurants. And there is a reason for upping this guidance also. The reason is that medium-term and long-term outlook for the food service industry and Indian economy is fairly intact. And that is the reason we are putting our investments in 3-4 areas. First and foremost, the area is network expansion. We are expanding number of stores. In the beginning of the year, we had given a guidance about 125 restaurants. As of now, we stand our guidance with 145 restaurants, and we have already opened 103 restaurants. To support this network of restaurants, we are also investing in infrastructure. Infrastructure in terms of our commissaries. Right. We are opening 3 new commissaries and 1 relocation. We are also strengthening our OLO and mobile ordering. We are also investing in training center, because when all this restaurants come up, we need to train a lot of people.
Right. We just talked about guidance. I just want to get back to the point that you were making, because you had earlier given guidance of 8 to 10% for same-store sales growth for the fiscal, which looks now impossible to achieve for you guys. What will be your same-store sales growth number then for FY14?
Aisha, we have seen a wide fluctuation across various months during this year. Our expectation at the beginning of the year was that second half will be better, looking at that the government is finally will take up quite a lot of steps and revive the Indian economy. But as we see today, there is no progress in the second half. Rather than the GDP growth has further declined. And all these factors point out that 8 to 10% which we have thought that beginning of the year we'll achieve. At this point in time, we are not able to give any guidance because of the volatility we have experienced across the months.
Will you grow in same stores, or for FY14 you may end up with no growth in same stores?
There is a possibility. That is the reason we are not giving any guidance. We have already entered the negative territory at this point in time. So we are not hazarding any guess that how the Q4 will be there and how will be the annual growth. And in the same breath, I like to also highlight that we are not giving any guidance in terms of EBITDA margins as well, because EBITDA margins has 2 factors or 3 factors to be taken into account. First factor is same store growth. Second factor is inflation, and third is what is aggression about the new stores.
Okay. Will you remain in the negative? Just a yes or a no?
I can't comment on it because it depends on the 2 factors which I mentioned to you, the economic growth and the inflation.
Assuming they remain as is, would it again be a negative tick?
See, as we saw in January, there is no upside we are seeing in January. That much qualitatively I can answer you.
If I look at the entire market share of the pizza market or the fast food market, you've lost market share, and the difference between Jubilant FoodWorks or the brand pizza, Pizza Hut and Domino's is now very low. So are you worried that you're losing market share?
I'll beg to differ with it. In 2012, our market share had improved from 62% to 67%. Now 2013 numbers are not yet out in the market, but our own estimate about it is that our market share is only increasing at this point of time. No player in this market is opening 145 restaurants in a year. When you look at even the erstwhile competition, they are also not growing this kind of number, although they have aspirations to grow very fast. But this kind of number growth is not seen. So we are fairly confident that our market share will only increase. Although at the same breath, I like to also highlight that we are not chasing market share. We are saying that we will open 145 restaurants during this year, and we are chasing the target.
Makes sense to expand so aggressively when market conditions are tight and tough, because if you are expanding, you are obviously having that expansion is having impact on your margins, your return on equity is falling, and markets are obsessed with these two numbers.
No, I agree with you. Short term, the market is obsessed. We are aware of this, but we have set our sights on the medium to long term. As I mentioned earlier to you, that medium to long term outlook for the food service industry, for the pizza industry is intact today. And that is the reason we are investing and we are expanding the network of restaurants. We are expanding our infrastructure in terms of commissaries, online ordering. We have also launched a new format of our restaurants called Pizza Theater, basically to excite the consumers who are entering our restaurants. We are also launching new products. We are focusing on innovation quite a lot, whether it's accessibility in terms of mobile ordering and online ordering, or the new product like Pan Pizza we have launched in last quarter. So our sights are set in the medium to long term outlook for the growth. We are not perturbed by the short-term outlook which this market has today. And our view is that till elections, there may not be any significant improvement in this market.
Ravi, I just want to question you about, you guys also giving a nod, or rather your board, to increasing the FII limit to 55% from the earlier 49%. What's the rationale behind it? Because for FIIs to increase stake to 55%, either the promoters will have to offload stake or issue fresh shares. So which route do you think the company is going to take?
See, what has happened, our earlier limit was 49% and we already touched 47%. As for the RBI guidelines, the moment you touch 47% limit, further FII purchases are restricted and they are subject to RBI approval. So FIIs are facing quite a lot of trouble in buying the shares of the company for the last 3 weeks we have observed. And that is the reason we have taken the limit up from 49% to 55% so that it becomes easier for FIIs to purchase the shares. As far as the founder shares is concerned, it is close to 50%, slightly lower than 50%.
Ravi, finally, there's a question coming in from our viewer as well, Dhanurdhar Bhalla. He's written in from New Delhi and he has a very simple and plain question. Are you looking at any price increases in the near future?
We have taken 2 price increases during this year, which was one in June and other was in November end. And there is a marginal increase about 1-2% we have done in terms of correcting the Pizza Mania prices from 44 to 49 rupees. We are not looking at any more price increases this year. Definitely not.
All right. We appreciate your time and thank you for joining us.
Thank you.
Nifty is at a 4-month low, and whatever we gained yesterday, we pretty much have lost that Tuesday advantage. 5975 for the Nifty. Mitesh, we got a bounce yesterday, but it is back to the losing